As the prophet of esports, I rely on trustworthy and meaningful data every day. Data from our research partner, YouGov, offers the most complete view of esports fans and gamers in the world, providing context to who they are, what they think, the brands they buy, and things they do. YouGov's connected insights and research services inform strategy at every level. If you're a team, a brand, agency, or rights holder, you should be talking with YouGov. Their partners measure and maximize ROI and are telling compelling stories with data. Visit yougov.com/gaming-esports to learn more.
Let me bring up the story here, which was Cathie Wood continues to load up on Skillz stock. Skillz has taken a bit of a beating in the markets. For those of you who don't know, they're a platform where you can essentially play against, like challenge other players to more casual games for money. And supposedly Cathie Wood's ETFs are loading up on Skillz. They own, as of April 23rd, 6.9 million shares in one of her funds and 11 million shares in her other fund, which represents, there was a percentage ownership here, which now I can't find. 1%, they own about 2% total between the two funds. So 2% of Skillz between the two funds. I don't know if you guys have thoughts, because Skillz has taken a pretty big nosedive from a stock price standpoint. Still very valuable business, right? And I don't think many of the fundamentals have changed. I don't know how you guys feel about Skillz. And Cathie Wood's probably the smartest investor on the planet right now. And so hard to be contrarian with her, because she has done extremely well. But what is the feeling on Skillz in this context?
Yeah, I mean, I think we were, fairly, you and I and the rest of us were a little bit negative on Skillz back when it was trading, in the 40s. I think the valuation they were getting, they were really being valued as if they were like a social media platform, like almost a Roblox on steroids, where, what they really are, I think is way more of a mobile game developer. There's a lot of revenue concentration. I think it's 88% or 80 something percent of revenue comes from 2 or 3 games. So pretty highly concentrated, amongst a small amount of games. There was also some data out there showing the downloads of those games starting to slow. So I think that's kind of led to a bunch of short selling, which has really, led the stock to come down. You also saw they did a big secondary round where the founder, sold a bunch of stock. So that's not usually something you like to see right after a company IPOs. So I think that probably got investors a little bit spooked. There was also a short report out that, I don't want to comment too much on, but I thought it was really compelling, where they talked about basically how they're kind of double dipping on revenue a little bit, in the sense of they're giving players free money for bonuses. And then when players go and use that money to play the games, it's counted as revenue. But because the money they're giving to players is basically fake money, it's all digital until someone cashes out, until they win and cash out. They're effectively creating revenue through sales and marketing. And when you look at the cash revenue, which would basically be what players actually deposit into the system and then use to bet, the revenue number would really be, something like 40 or 50% less. Now you kind of need an accounting major to really understand that to some extent. It's an interesting read, but I think it's a little bit frightening. So if you think about their, the cash receipts, the cash in the business maybe is a lot lower than what the actual revenue looks like that is being generated. And when you have a business that's trading on a revenue multiple, particularly a really high one, that can lead investors to get pretty scared pretty quickly. Then you toss in some potential, maybe regulatory problems down the line, where they're kind of operating this gray area of online gambling. There's a lot of potential issues. Now, I don't want to opine too much. Just, that's kind of the bear case and the bull case. I would say, like you said before, Cathie Wood, they're rock stars. They absolutely kill it. And, particularly Nick, he was on the podcast last week. I said earlier, I think he's one of the sharpest guys in the space. So, if they have a thesis, they're probably right. And obviously, like you said, the fundamentals haven't really changed, but the price has. So, when the price is down 60%, the multiple you're paying is obviously a lot less demanding. So, at these levels, maybe it's a decent time to buy. Personally, I don't think I would, but it's clearly better buy now than it was at 40.
I mean, Jeff, if you had to guess, what do you think is the ARK thesis here to be buying up more share? Is it just a question of average cost here, and then averaging down their cost?
Well, I think to some extent it's indicative of a good process, right? Like I respect. Now that's not to say they're right, but I do respect the fact that they have a thesis and the stock has gone down, so they're using it as a buying opportunity, right? Like that's what good investors do. And when you're right, that's how you end up making tons of money. I think their thesis is built around that it's a platform. They're building the competition layer of the internet. All these AAA games are eventually going to kind of add in these gambling aspects. And, you'll see a day where Call of Duty Mobile will have a gambling layer, and Skillz will, obviously I'm just throwing that out as an example, and Skillz will be what it's built on. If that future ever comes to pass, yeah, it's definitely going to be worth more than 5 or 6 billion, whatever it's worth now. It's going to be worth 20 or 50 billion. So that's what they're making the bet on. And I respect that they have conviction in the thesis, and they're buying more. I mean, we've seen them do this in Tesla. We've seen them do this in multiple other stocks. Right. And be massively right. So yeah, I don't really want to be on the other side of their trades typically.
Chris asked a good question. How much is Skillz hurt by the SPAC strategy fizzling? I mean, it could just be that, right? Like, could just be part of the sell-off could just be that SPACs in general have been hurt pretty badly across the board. Like you have was it Forbes who wrote an article on SPACs sort of fizzling out or something like that, where it may just be a general they just got sort of hit by splatter from something else. But
which is weird, because it's like you would think that once it's a business, like you would look at the merits of the business, not like I could see SPACs that haven't done an acquisition yet. You would maybe trade within that bucket, but that's not to say that's not happening, because I do SPACs that have de-SPACed have been getting hit. It kind of defies logic, because I would think at that point who cares how they came to market? You just look at the the fundamentals of what they are now. So
yeah. Let me just read some of these, get caught up on some of these comments. Kenneth says, kind of yikes, not going to lie. Good take from the juice. I'm telling you, guys, I will, little inside baseball here. I came up with the juice like a minute before the show started. Okay. It's just a little bit of inside baseball. You don't want to know what Jeff was going with before. You just don't, don't want to know.
The real question is, when am I going to get my G Fuel,
your flavor,
my checks from G Fuel? Didn't XQC do a flavor of the juice?
He did.
I mean, I would like my revenue share. Don't you know the founder? Can he hook it up?
Cliff Morgan, great guy, one of the smartest guys in the gaming space. Great podcast.
I may have said their product tastes like Ram's piss last week, but that was a joke from Beer Fest. It doesn't. It's good. I actually tried one I never had one. Now I've had one, and it wasn't actually Ram's piss. It was good. So drink G Fuel.